Good morning and welcome to the presentation titled Strategic Delivery, a unique, exciting global precious metal company. And I'm very pleased to present this to you on behalf of Sibanye-Stillwater. As always, a good mining presentation contains a safe harbor statement. There are a number of forward-looking considerations in this presentation, and I would urge you to take note of the disclaimer. Moving on to the next slide, you will see it's titled A Unique, Diversified Global Precious Metal Company. We're unique from the aspect of our combination of commodities that we produce, both gold and PGMs. And we're also unique in terms of the way we are diversified globally. We probably have the best global diversification of any significant PGM company. I think you will see from the maps on the right-hand side that we are located both in the United States and in South Africa. We have an exposure, a small exposure in Zimbabwe. I think importantly though, when you look at the reserve base that we work off, it's really only a small percentage of our resource base. In fact, 14% of our resources are in reserve. So the sustainability of our business and the potential to grow our reserve base from a very significant resource base is very clear. I think the other interesting point is if you look at the split in EBITDA, adjusted EBITDA in the right-hand side pie chart, you'll notice that a very significant portion of our EBITDA is coming out of our US business, even though it's only 17% of production ounces. So highly profitable operations in the United States. We do have a primary listing on the JSE, and we have a secondary listing on the New York Stock Exchange, and the share numbers are all indicated at the bottom of the slide. Moving on to our strategic intent. Our strategic intent is to strengthen our position as a leading international precious metals mining company by doing the following things, and these are really our strategic focus areas. Importantly, a business is all about people. Building a value-based culture is critical in achieving our goals, ensuring that we achieve safe production and so on. So it's a thread throughout the business. Ensuring safe production and achieving operational excellence, that's our core business. That's where we compete with every other mining company, and we think we do that quite well. We can almost put a big tick through deleveraging our balance sheet. That's been another strategic focus area, and I will show you later on how we've very successfully deleveraged the company since taking on extensive debt to buy Stillwater. Addressing our South African discount comprises of two things. The one is trying to improve the situation in South Africa, and then secondly, in the longer term, perhaps looking at a change in our primary listing. And based on doing all those things, we should see a strengthened equity rating, which would allow us to pursue value accretive growth. In terms of the central focus and what pulls all this together is our focus on ESG, and I'm going to cover that in some detail in the next slide. But essentially, that is core to our business, and in my view, you're not even on the international playing field if you're not doing that well. So that receives a lot of attention from both myself and the executive team. As I said, I'd like to just really give you some idea of the recognition we've received regarding our ESG credentials. We were admitted as an ICMM member in February of this year. And as most of you would know, you have to go through a very rigorous evaluation process to be accepted as a member, and I'm pleased to say that we went through that process and are proudly now members of the ICMM. In terms of the climate change disclosure, you will see we received an A rating, one of only 179 companies globally, and in fact the only one from South Africa, so we're very proud of that achievement. We have been included in the Bloomberg 2020 Gender Equality Index. We're one of 325 companies globally, and one of only 8 South African companies which have made this achievement, and that's over 11 sectors that were considered. We were re-included in the FTSE Russell ESG Index of the JSE. With respect to the annual Rand Water Awards, we were recognized as the most collaborative and water-saving company in the South African mining industry. We're proud of that achievement. We are also members of the World Gold Council, and we subscribe to the responsible gold mining principles. Important to just note at the picture on the right-hand side of this slide refers to the Good Neighbor Agreement that we have in place in the US, and we celebrated 20 years of environmental and community collaboration under this Good Neighbor Agreement. The Good Neighbor Agreement, in my view, is a world-class agreement which we are in the process of rolling out in South Africa as well. Just moving on to the commodities that we have very consciously decided to ensure we have exposure to, and clearly we have been correct in doing this, and we've done it at the right time. If you look at the top 10 commodities, we are essentially in 8 of them, with only platinum being in number 10, where the 3-year performance is not in green. But certainly rhodium, ruthenium, palladium, iridium, silver, gold, and nickel are all commodities that we proudly associated with and do produce to some extent. You can see from a rhodium perspective, amazingly, it's only 4% of our prill split, but today accounts for 21% of our revenue. And in fact, more recently, since this slide was prepared, rhodium has increased even further, so it's even a larger portion of our revenue. I'm very pleased to say that last year at this very conference, I said that based on all the acquisitions, based on settling down our business and integrating the acquisitions, that we were due for a re-rating. And that was in September 2019. Well, the graph below clearly shows the re-rating having come through, and very pleasingly, we have outperformed all the major gold and PGM companies from a re-rating point of view, and you can see that from the red line in this graph. I'm very pleased to say, I'm going to show you at the end of this presentation that we are still significantly undervalued, and I do believe that based on some of the information I'm going to share with you shortly, that this re-rating and outperformance will continue. Just moving on to some of the more operational results that we released in August at the end of the first half of our financial year. We've all been impacted by COVID. Sibanye-Stillwater followed a very responsible approach to this. We locked down essentially our entire business in South Africa, and we restarted it at rates much lower than we could have, making sure that we did not compromise the health of any Sibanye-Stillwater employee. And that really refers to the lockdown that took place in South Africa. If you look at the bullet points on the right, you will see that our US business essentially was able to continue operating without any major interruptions, other than having to halt the non-essential growth projects with a view to reducing out-of-state workers and reducing the number of employees on the mine. Very pleasingly, despite all the social distancing measures that had to be put in place, the additional sanitizing, our US business still achieved 89% of planned Q2 production, which is of course the quarter in which COVID really had its biggest impact. As I said, the South African operations went into full lockdown at the end of March, and we've been restaffing the business from the end of April in a responsible way, as I said. Our South African gold and PGM businesses produced about 50% of planned output, and you will see that that makes the financial results that I'm going to share with you in the next slide all that more spectacular. We have introduced a protocol to protect what we call vulnerable employees, that's employees with comorbidities, and that is a very sensitive and difficult issue to deal with, but we are progressing that initiative slowly but surely. By the end of H1 2020, the South African gold business had been restaffed to about 73% and was achieving about 86% of output, showing that there is enhanced productivity with lower number of employees at work. And we experienced exactly the same thing in the South African PGM business, with 65% staffing levels at the end of H1 2020 and 73% output. By mid-September, we were almost up to 90% at both operations, and very significant outputs in gold, with the South African PGM business obviously following shortly behind. Just moving on to the financial slide, despite COVID and the interruptions from COVID in the second quarter, we still achieved record earnings for the group. The second quarter was clearly anchored by the very strong performance in Q1. You will see that, and I'll come to the graph on the right hand side now, that we had an 8 times increase in adjusted EBITDA year on year, and that was in dollar terms $990 million adjusted EBITDA versus $142 million in the same period the previous year. Important to note that 94% of our earnings have come from operations that we have recently acquired through our aggressive PGM strategy. And just to complete the bullets on the left hand side, the Marikana integration is proceeding exceptionally well. We originally forecast 730 million rand of annual synergies, and we are now at a run rate of 1.85 billion rand. The graph on the right hand side really shows the spectacular performance in essentially the last half of last year and the first half of this year. Importantly, what you can see from that is the very significant contributions that our PGM business is making. That is indicated in the colors other than gold. What's also very important on that graph is the red dotted line, which shows our net debt to adjusted EBITDA, and you can see how we have brought that down through the increase in EBITDA from around 2.5 times to 0.55 times. And there's still a lot of good news in terms of deleveraging that I will share with you in the next slide. I also want to say that just in concluding this slide, that it's not only revenue that was impacted by rampant commodity prices that delivered this result. In a time of reduced volume, the Sibanye-Stillwater team sprung into action and made very significant cost and capital control safeguards, along with working capital management that assisted in achieving this result. So all in all, a very good operational performance. Just moving on to the next slide, as I said, I have more good news in terms of deleveraging the company. You can see how the deleveraging has gone down from the higher levels down to 0.55. That's indicated by the dark grey line. You can see how the covenant has stepped down from about 3.5 times down to 2.5 times more recently. That was in line with how we planned the deleveraging. You can also see the contribution that is made with the convert in the light grey above the net debt to adjusted EBITDA blocks. And you can see that as our share price has rallied, how the convert is actually distorting the deleveraging in a negative way. The good news is, should we choose to apply a soft call option, which we have on the convert, and the convert gets converted into equity, you can see that our net debt to EBITDA will actually drop to 0.23. That is something we're considering, and in my mind, other than actually bringing down gross debt, will really complete the process of deleveraging following the acquisition of the Stillwater assets. Just moving on to what I consider completing the loop in terms of being a capital funded commercial business, and that is dividends. I think you only complete the commercial cycle when you return cash back to shareholders in forms other than just equity or total shareholder returns, including equity. If you have a look, when we took on the debt, we did stop our dividend. That was in June. The last dividend that was declared was in June 2016. Very pleasingly, we were able to declare an interim dividend, a very conservative interim dividend in August this year when we announced our results. You can see it translates to about just under 12 US cents per ADR. What's important to note, that is actually only 15% of normalized earnings, whereas our dividend policy is between 25 and 35% of normalized earnings. So roughly half of what we would normally declare as a dividend. Having said that, even being only half what we would normally declare, you can see it's substantially bigger than any other previous dividend that we've declared. So I certainly, together with my team, look forward to being able to declare a full year dividend next year with our final results, and clearly that's going to be subject to no further economic chaos or second waves of COVID and so on. So that was very pleasing. So as I said to you, we have good assets. We have good credentials from an ESG perspective. We have shown good operational performance. We are exposed to the right commodities. our earnings are coming through. We have, in the last year, outperformed all our competitors in both the gold and PGM space. We've essentially deleveraged the company, so we have de-risked it. We have reinstated dividends. And the last slide I want to discuss actually still shows how significantly undervalued we are and why I can expect or suggest that the outperformance trend will continue. So if you look at this slide, you will note the different multiples and comparisons that the industry and the investment community uses on an EV per EBITDA, looking at 2020 estimated and 2021 estimated. You can see, you know, we in the region of the highest there, based on 2021 is approximately 3 times EV to EBITDA earnings, whereas senior PGM companies are running at around 5, in the intermediate golds, you know, at about 6.5, and of course senior golds high at about between 8.5 and nearly 11 times. So there's significant upside on that metric. If you look at price to free cash flow per share, also considering 2020 and 2021 estimates, again, you can see we are not trading at significant multiples, and there's significant upside in terms of the potential re-rating. In terms of our net debt to EBITDA, adjusted EBITDA, I think I've clearly explained that we expect to be well below 0.4 times, probably closer to 0.2, and you can see that has significantly de-risked the company. If you look at it on an EV and market cap basis, you can see that our market cap is significantly uncommanding, and we look forward to our enterprise value flowing through into our market capitalization. With that, I would clearly like to thank you for your time, and I hope that I've been able to clearly outline the investment case in our unique company, which is unique in terms of its gold and PGM commodity mix, and it's unique in terms of its geographical mix from a PGM perspective. Thank you very much for your time.